So just to tell you how my day got started, all day yesterday I thought I've got to get this stuff prepared for tomorrow. I had it done and ready for last time, and then we canceled, and so I needed to get my head back in it and get everything printed off and ready to go. And the next thing I knew, it was 5 o'clock and I needed to rush out the door. And so I was trying to do it at home last night, and I realized that I needed to make some changes to some slides and one thing and another. So I was at the office just before 7 this morning, which is completely out of character for me. And I'm looking on my computer for some of the stuff that I had prepared for today, and I couldn't find it. I searched and searched, and then it dawned on me, I worked on that at home. I was on a jump drive. Guess where my jump drive is? It's in my church in New Bloomfield. So some of what I had prepared I don't have, but I got close enough that I think we can have some.
In case you guys don't know, Joan is also a pastor of a local church, so she sees both sides.
Yes, I am. I have a church at New Bloomfield. Our average attendance is about 41 to 44, and lovely church. I love it. I've been there. This is my second year, coming up on the end of my second year, and so it's great. Okay, so we're going to deal with tables 2 and 3. Those are the financial ones. Those are the ones that are going to be involved in calculating your apportionments. So that's why they're really important. I thought the best place to start would be to talk about the buckets. What buckets things belong in. Table 3 to me is by far the easier table. It's the revenue, and so that's where we'll get started. So to start with, the first line on this section is pledge revenue. And most churches will understand what a pledge is. Some don't, surprisingly. Within my first month or so at my new church, I sat down with them and asked them about their capital campaigns. And they were just, the tension in the room just went through the roof immediately. I had one lady say, if we do a pledge drive, I will never give this church another dime. Yeah. So my church doesn't get involved in the pledge stuff. But for those churches that do a pledge drive, you'll have people hand in a pledge that they're going to give X number of dollars per year, per month, whatever they pledge. And so when gifts come in from that belongs in this line. So you know who it is, and you know that they're making a payment against a pledge. That one's an easy one. The next line then are those like the lady who told me she'd never give another dime. I know who she is because she gives me a check. It comes through the offering plate and I can identify that giver, but she's not a pledger. Those go there. So I don't have any pledgers at all. Most churches will have some of each. And then finally, there's loose plate, where they drop the $10 bill in the offering plate and you have no idea who it came from. So those are all 3 different buckets of money.
So what difference does all that make? What difference does it make if you have a pledged person and person that gives?
I would love to be able to.
How does it?
We didn't create.
I would love to be able to give you a really intelligent answer to that. I don't use the data. What I can say is that it sets the table for us to be able to, as a conference, as a district, as a church, be able to assess how successful our pledging is and how much of it we're collecting and all of that.
And I would say that's from a church management perspective.
Mm-hmm. Yeah.
That's huge in how we set our budget for the year.
Yep.
Which then feeds into our spending for the year, which then feeds into our apportionments
Mm-hmm.
over time.
Yeah.
So that's how we set our spending budget.
So you do a pledge drive and you're
I understand that,
Yeah.
but if you look at ours, we couldn't afford to run the church based on our pledges.
right, and
We
so
couldn't set a budget
And like
based on.
New Bloomfield, if they don't do any pledges, how do they set their budget?
well, it's by. In New Bloomfield, you kind of can get a pretty good feel for what's going to come into the offering plate. And so by having this data, it gives the church the opportunity to say, okay, we're going to do a pledge drive, and we know that we're going to get about 80% or whatever your percentage is. Our pledgers are going to pay about 80% of that. And we know that other people who don't pledge but that give, we should expect about this much. So it gives you an opportunity to budget a little bit better because you know your buckets of money that are going to come to you.
And our parishioners know that if we don't have a pledge for some, if our pledge giving's not high enough, there are programs that are cut.
Yep.
So they're encouraged to pledge because that, if we can't afford to do it, we're not being good stewards of our funds.
Mm-hmm.
If we're not trying to use it wisely, so.
Right.
And plus, that's part of abundant generosity too, is just making a commitment.
Yep. I think that people tend to pay to give more when they make that promise that they're going to. Mm-hmm.
She'd like to know what size church you go to. Okay.
What was the question?
What size is your church? What's your average
We have
attendance?
about a $1.5 million operating budget and about 900 to 1,100 attendants.
Oh. She's a little bit bigger than my church.
Yeah. Our attendance is about double yours.
Oh, is it? Okay. Yeah.
It's not.
About 100.
All right, then, I mean, this one's obvious. Interest or dividends. If you have bank accounts, savings accounts, investments, this is where your dividend and interest money comes. Sale of church assets. This is something that you probably won't use a lot, but if you have a copier that's worn out, still got a little bit of life in it, but you need a better one, and you're going to sell the one you've got, that's where this revenue goes, is in this little sale of church assets bucket. I mean, it could be selling property off an old church building that you're not using anymore. I mean, you get the idea of what that is. Building use fees, you know, anytime you rent your building for anything, that's where it goes. And so, you know, at the end of the year, you're going to be asked to report this way. And so all I'm doing at this point is just defining what those are. And then, of course, fundraisers. I don't know, you know, our church has a Lord's Acre sale every year. We have PAUMCS and MUMPKINs, which we go buy pumpkins and mums and sell them in the fall. And then we have a flower sale in the spring. So we have lots of fundraisers. So all the money that comes in from those goes in that bucket there. Capital campaigns. Again, lots of churches will never have one of those. Some will. It just depends. I'm sure that your church with the big membership probably has a capital campaign now and then. When I was a member over here at Missouri United Methodist Church in Columbia, they did a capital campaign a couple of times because they were building a whole new building. And so they went out and on top of the regular Sunday giving, they asked people to give money to this capital campaign. So it was for a special purpose. So any money that would come in through that kind of an initiative would go in that one. Memorials and endowments and bequests. Memorials, obviously, you know, one of your members passes away and they name your church as you know, a memorial for that person. So donations will come in for that. Somebody leaves you some money in their will, that's a bequest. So that's going to be that. Endowments, again, it's somebody that, over at Missouri United Methodist, they had a situation a number of years ago where and this was years and years and years and years ago, decades ago, where their financial reserves had gotten down low enough that they really didn't have much money, and one of the rooms in the basement flooded, and they had no funds to fix that. It was a disaster. So some very faithful members of the church got together and gave some seed money for what they call the, it's gone. The Heritage Fund, there you go, thank you. And they said, we're going to give you this money, but you cannot spend it. All you can do is add to it, and when it gets to a certain amount, then you can begin to spend the earnings, but it has to be spent for maintenance of the building. Now that's all morphed, and it's all very different now, but at any rate, the gifts themselves are called the corpus, and they're not spendable. That's an endowment, and so just be aware, when somebody gives you a gift like that and says you can't spend the money, but you can spend the earnings, that's an endowment, and there are some legal issues around that you need to be careful with, and you have to be sure that you don't spend the corpus and that you are prudent in your management of it and that you use the earnings toward the restricted purpose, so just be aware. But those kinds of gifts all go in that bucket. And then the 63 is my favorite. It's the, oh, I don't know where that goes, so let me stick it there. Special Sundays, advances, general advances, World Service Conference advances. Now and again, you'll have people, one of the conference advances year before last at annual conference was Imagine No Malaria. Millions came in. Well, over 1 million came in across the conference. And so as that money came in through the offering plate, it was earmarked as such, and that kind of revenue goes there. Special Sundays like Boy Scout Sunday yeah.
One other thing, I want to make a plug for the Missouri United Methodist Foundation on the endowments.
Okay.
I know when there's turnover in church staff and things like that, sometimes that information of I wanted this to be set aside for X, Y, Z. That's where the Missouri United Methodist Foundation is really nice because you can set up a fund there. And you can have the paperwork and the conference holds on to that and make sure that that's what that is used for, what it was originally intended for. And so it's always nice to go back and so if there's turnover and that's 6 people later that have no idea where those funds are from, that are just sitting in a bank account that you might have. If you can send it into the Missouri United Methodist Foundation and invest it that way, then that's a good way to hold on to the original
I agree.
reason for it.
One thing that I would add to that is that it's important, though, to keep at least a copy of your original documents. I know when I was a member at Court Street in Fulton, they had been blessed with endowment funds that had come in through the years, and there was question as to whether or not the corpus was restricted or not. And the foundation said, well, we think it is, but we're not sure. And so luckily, we were able to dig out the will, and we were able to find out the answer to that question. So absolutely, they're good. Absolutely. They are wonderful. Monette at the office is just wonderful. She knows more than she's forgotten more than I'll ever know, I think. So. And she doesn't forget very often. Okay, equitable comp is money that could easily come to your church if you have been given an award of equitable comp. It's money that comes from the conference to help a church pay for their pastor. There are churches out there that have it. It's granted in special circumstances. I don't want to get into all that. Just this is where you would recognize that revenue coming through in your year-end reporting. Okay. And again, advanced specials, connectional funds. This is money that you're receiving from the conference for the church. Not, the other one is if you're bringing money in through the plate and sending it on. This one is if the church is giving you something to use in your ministry. I would guess that this is where I would put new church start money and that kind of stuff. And then grants. The foundation, Missouri United Methodist Foundation gives grants. Lots of foundations do, of course. We were fortunate enough to have gotten one from the foundation, and so that income needs to be reported separately, so it shows what it came for.
A few years back, we actually had gotten a grant to pay an associate pastor's salary. So would that go under the compensation, or would it go under the grant?
Well, equitable comp is very specifically equitable comp. It comes from the conference as equitable comp, and you know that that's what it is. Okay. You can also get a grant for other things, maybe from different places, but that would be grant.
Yeah, if it comes from the conference, then it'll be equitable comp. Okay.
Mm-hmm.
Thank you.
All right, so that's revenue. Revenue's the easy one. Are there any questions at all? Are we good? Do we need to breathe? Okay. Table 2. This is exciting stuff, isn't it?
Yeah.
Woo! Accounting! Table 3, or Table 2 begins with your fair market value of your assets, and then your debts as well. This is one that we trip over, that churches trip over because of the way we account at churches. If every single church was a business with an accountant, well, those books would be kept so that you knew exactly what your fixed assets were all the time. The truth of the matter is that the local church, the year that they spend the money out, there's a record of it, and next year it's gone. Nobody knows anymore. And 10 years or 15 or 30 years down the road, nobody will have a clue what was paid on that building. So the way I do mine is I pray before I start, and I say, please, Lord, let last year's number still be there when I open this, because I don't know. Most of the time, somebody somewhere will have put that number in there, and you just carry it forward. And then after we get through today and you know all about accounting, you'll have that information about new assets going forward. It's just the fair market value of your land and your buildings and your equipment. Honestly, that's a hard number to come up with.
Insurance paperwork is a good place to find that if you can't
There you
find
go.
the number somewhere else, as you call the insurance company and say, what are you valuing us at?
Yeah, that's right. All right, and so I know, like Court Street, they bought a building years ago with the intention of creating a Christian Ed Center. They never did finish that off. It is rented out to Curves, and so that's where this goes in this line here. The other assets. It's real estate that's not used in the ministry of your church. And then debt, loans against your church assets. Lots of churches have mortgages or lines, well, I won't even say that, mortgages against your buildings or your land. And then other debt, this is where I would put the balances of your credit cards if you're carrying one, and shame on you if you are. And then your lines of credit and so on and so forth. So, I mean, this is the easy part. If we could just stay here on table 2, life would be good. Unfortunately. This section is easy too. I don't know whether every district is like this or whether it's just mid-state, but when I open my year-end reporting to enter this stuff, all of the apportionment information for conference and district is already there. I visited a church this spring when they were getting ready to do their year-end reporting, and their pastor was asking the treasurer to provide this. And so I don't want to step on that if that's needed somewhere along the line. But I know if you decide to enter this information online, these things are already going to be there. What you were apportioned and what you paid for both.
When I went to fill our table in, those were blank, and we heard that they would be filled in later.
Yes, it's
Okay.
grayed out where you
So it's
can't
not
type in
there.
there.
If you don't see the numbers.
Okay.
They're just grayed out.
Okay, great.
But at some point, we're hoping to get the final reports.
You can go back in right now, if you'd like, log back in, and you can print out your report. It's
Okay.
dumped in there now.
Okay, because our bank wants to see that. and I
Oh,
can't wait to-
yes.
Okay, so this whole slide is about the district or conference and district apportionments, and luckily that information's already there. Although, if you've set up a system, those are easy numbers to come up with. All right. Yes.
The amount that you paid to the district is already in there for this year. No,
Well, it's grayed out where I can't fill it in for district apportionments, I think.
Now, Al doesn't have that information, right? Michigan, right? So should churches put that? Churches have to put the district number in there. The district apportionment.
Okay, well, don't tell Lynn that I did that wrong then. Did you save me when I sent it in wrong?
She may have saved you.
She must have.
We check them, we enter, make sure
Yes,
they enter it
every
right.
church
and
gets
check
checked by the district, and then I check again.
Okay. Okay, and again, this stuff should be, if you paid your general advance things through your apportionment system, if you sent it in with your apportionment check, this information should already populate. Is that right?
It populates for last year.
Right. So,
Stuff that you also put in vital signs.
well, maybe we should, but I don't. The only thing I ever put in there is the attendance for Sunday and how much money we brought in.
Yeah, I think ours also, our financial secretary is always asking me for any special offerings as well, so I don't know if that's something, again, can't see. I don't see your screen, so I don't know.
Okay, yeah. I'm embarrassed to admit I'm the one that does it for New Bloomfield, but those are the only two numbers that I even have access to. So.
I don't think it asks that they're broken out, it just wants to know how much you took in, you know.
Oh, okay. So she's just adding it.
Our apportionments, how much have we paid toward all the different special Sundays, so I don't know if that's part of vital signs or not.
Yeah, but it's part of the lump sum of the giving to the missions, or whatever it's called. I can't think of what it's
Yeah,
called,
but
but
it's not itemized out
right, it's
as
a lump.
general advance or sort of,
This one you do have to fill in. My church, I don't know whether it was true at some point in the past, but it's somewhere along the line, my church got under the impression that if they wanted to give to Heifer International, they had to do it directly to Heifer International, that you couldn't pay Heifer International through the conference, which isn't correct. You can. But so if you give money directly to something like that, this is where you would record that. If it's a United Methodist cause, there's another line for things like, I don't know, I mean, if your church gave money to United Way or something like that, that's not a United Methodist thing, but you gave it directly to the organization, they want to see what kind of money you're giving out.
Okay, let me ask this. We have what we call a benevolent fund,
Mm-hmm.
and people give to that. It's like a separate account to use to assist
Mm-hmm.
things.
Mm-hmm.
It's not exactly a UN cause,
Right.
but it's a cause
Right.
that people contribute, so.
So yeah, I mean, I think you could put it there. I think I skipped over here. I made some notes on this stuff as I went through.
Is that line 44?
Non-UM causes is line 44, yes. Special Sunday offerings, again, most of those will be, that information will be available because you'll almost certainly send it through the conference. So
I'm not sure if that one's.
I don't know if that one is, if you have to enter it or
It's
not.
conference autofill. It's
Okay, good.
45.
Is that the same as line 42, back on your previous? Because line 42 says special Sunday offerings.
That's
Annual
the
conference.
total.
Yeah, that you,
And then it just breaks
Yeah.
it
The
down.
general church and annual conference are two different things.
yeah.
Annual conference are Missouri conference causes, the general church is Methodist as a whole.
Okay,
Like one great hour of sharing is a general church
General,
thing.
Okay,
Mhm.
all right.
Okay, now we're into the compensation. And really, these are they're kind of self-explanatory, but maybe if they cause confusion, maybe we can clear that up. Direct billed clergy benefits. Every month, your church, if you've got a full-time pastor, gets a bill for pension and health benefits for your pastor, your associate pastors, or whatever. And even some of the half-time ones get a bill for retirement money. This is all of the benefits that you're billed for by the conference, except for the health. Those are all going to be on the same bill. They just want you to break them out in this year-end reporting. And so the next one is the same thing. It's the health insurance part of what you're billed for every month. They want yearly totals, of course. Then they want to know the salary of your senior pastor. the salary of other clergy that are appointed by the bishop. So if you've got associate pastors or you've got, anybody that's appointed by the bishop belongs here. You may have other pastors, like a youth pastor that you've hired directly, that's not appointed by the bishop. This is,
Key trigger there is they have a pastoral support plan.
yes, and they're appointed by the bishop, yes. Okay, this is housing, utilities, housing allowances, all of that housing stuff that you pay the pastor belongs here.
Says all clergy, they mean all appointed clergy then, or?
I believe, I think
Or
it's,
every clergy that you have at your church that's appointed by the bishop? All appointed.
So
Yeah.
all of this stuff really comes off of pastoral support plan.
Yeah. I just added that for everybody.
yeah, depending on,
Theoretically, it could be grayed out too, to where you don't have to worry about that. The only error there would be is if the church isn't paying what they actually were supposed to be paying to the pastoral.
yeah, I don't think that that's grayed out. I think you have to fill that in.
Yeah, you do, but
Yeah.
I'm saying theoretically it could be, but this is a good check to make sure that if the bishop said you're supposed to be paying them $20,000, you actually paid them $20,000.
Well, like with utilities, if you're giving them utilities and you've put $5,000 on the PSF, but this pastor only spent $3,500, it's the $3,500 that you would report. The actual
So
money
for an
spent.
accountable reimbursement plan
Well, that's,
would be the
that's-
ones where it would vary.
yeah, that, I didn't think that I would not have called that part of an accountable reimbursement plan. I would have called that part of the housing PSF stuff. The accountable reimbursement expense, which is the next line, is that amount toward the bottom on the PSF that says how much you're going to let them spend for travel, for lodging when they go to annual conference or whatever it is they have to do, their professional expenses. But it's important to recognize accountable in this because they don't just get an allowance. You don't just hand them so much money a month or a check at the end of the year. They have to provide you with receipts and then you reimburse them for it. If you don't do that, then that money creates a tax issue for the pastor. So these are just accountable expenses. And then, I suppose some churches have those where they give them an allowance for stuff that's not accountable. But again, the distinction, the importance of that, number one is you have to report it here. But more importantly, it has a huge impact on what the pastor has to pay taxes on. So that's important to keep that distinction. Then salary and benefits total for deacons, diaconal ministers, and then finally for staff. Those are just reported. And so those numbers really should be fairly simple to come up with.
I think it's important to note that if you have a pastoral change in July, you have to figure half of the year with one pastor and half of the year
Right.
with the second pastor.
That's true.
Because they're able to shift how they allot their pastoral support in those designations, so it can vary from pastor to pastor.
That's right. That's true. All right. Something that people tend to trip over is what is a program expense and what is an operating expense. I would say that what the amount of money that you're spending on your worship and your music program and your Christian education, those are all programs of your church. And so that is where, and this line here, line 56, is the one that would be the appropriate place for you to record those expenses. Operating expenses, on the other hand, are going to be the utilities that you pay on your church and your upkeep on the building and your custodial services and that kind of stuff. That's going to be your operating expense. Do you see the distinction between those? I think again, I don't know about the only experience I have with the district superintendent is with Lynn, and she's she's awesome. She really is. She's a wonderful DS. And so she's going to look at this kind of information, and I've watched her do it, not with me, but I've watched her do it when someplace where I was a treasurer. She'll sit down with somebody and say, look at the way this is all shaken out here. You're spending all of this money. You've got this many dollars coming in, and you're spending this many of them on salary. You're salary heavy here, or you're spending too much on upkeeping your building. And so this gives her the information that she needs to be able to advise the church how to manage their money. And unfortunately, sometimes the church gets to that point where they have such maintenance issues that it threatens their viability to be able to go forward. And this information being cut into little buckets like this helps them figure that stuff out. So it's really important to keep these things separate.
Is there kind of like a formula that they look at? Like, you should not have over X percent of your
Yes.
expenses be, do you know what those are?
I
Is that
don't.
something that-
Yeah, I've heard Nate talk.
I wish I had anticipated that question, because yes, it's very
The
good
numbers like,
information.
You know, what is appropriate for staff?
Mhm.
50%? What is appropriate for operating expenses? 20%? That would be a good formula to kind of be able to aim for when you're budgeting and doing
Like
things
a
like that.
budget formula.
Yeah.
As a guideline.
Debt service payments. You know, in an accounting world, if you're going to record the payment, especially if you're accrual, if you're going to record a payment on a mortgage, you're going to record some of it to a liability and some of it to interest expense. This question says, okay, we don't care about that. We want to know what you're paying for debt service. That's principal and interest together. Capital expenditures. This is an extremely important bucket. And so we're going to take a major departure from typical accounting theory, and we're going to say that, of course, all right, let's talk like accountants for a minute. A capital expenditure in the accounting world is something that you're fixing that is going to last a while. So if you have somebody come in and put a new part on your boiler that makes it run again, well, you've just made a repair. But if that person comes in and says, your boiler's dead, we need a new furnace, and we're going to do that instead, well, that's a capital expenditure because it's going to last for years and years. If you go out and you buy a $75 calculator, well, in an accounting world, that's going to fall below the capitalization threshold, and you're going to expense it because it doesn't matter. And so that kind of gives you the accounting world. Here, we're going to reconsider capital expenditure only for the purposes of this reporting. And the reason it's important is because when we do the calculation for apportionments, this gets subtracted from your expenses. So you want to categorize anything here that you possibly can and still be honest. So that $75 calculator, as an accounting item, you're not going to capitalize it because it's small money. But for this purpose here, you're going to capitalize it because it's going to last for a long time. If somebody comes in and puts a new door up that costs $200, again, it's below your capitalization threshold, but you want to call it a capital expenditure because it is going to last a while and it gets subtracted, so you want to put it there. This is an important line. Please hear me when I say I'm not suggesting that you classify things as capital items that are not. I'm just saying that you have a whole lot more leeway in this reporting than you would if you were doing a set of financial statements for your accountant or for, if you were going to be audited or whatever. So, does that make sense? Yes.
How would landscaping?
Landscaping, I would capitalize. Mm-hmm. Yep. That's different than mowing the yard. Yeah. But landscaping, mm-hmm. Yep.
What about, we lease our copier? Could that go in there since we don't own it?
No, that's an operating expense. Yeah, sorry. If you bought the copier, you could,
Yeah.
but you're just leasing it, yeah.
Okay, so in the past year, we've had a lot of major improvements done, like in new ceiling, a new furnace, all these things.
Capitalize it.
And the thing of it was, the money which had been designated and built up over a period of years for these things that people gave for, we have 2 buildings, and they were designated this church or this church to repair. So, when we're filling out reports, somebody said, well, this is really gonna affect our apportionments. That has nothing to do with apportionments.
It doesn't. And not if you classify it correctly.
Well, because ceiling to me is capital improvement. That's
Absolutely.
It's been there forever.
Yep.
The furnace is
You're
gonna be
right.
there for years.
Exactly.
Lifetime.
Yeah. And so, if you fill out your year-end reporting wrong and you put all that stuff in operating expense, your apportionments are going to go up.
Right.
But it doesn't belong there. It belongs in that bucket right there, which we're going to subtract out.
When we go to figure your apportionments, you know, the district office will go in and double check everything, I go in and double check everything, but once we get into May, June, and Joan and I are starting to figure apportionments, and your apportionments went up 50%, we are like, what's going on here? So we go back in, start looking at things, we may call the pastor, call the treasurer, have Nate look at it.
Call the DS,
Yeah,
whatever.
We're
Mhm.
not gonna just say, oh, they're paying this. So, I mean, we really try to
Yeah.
help you guys.
Because this is gonna be a sizable, we're a small church, and it's a sizable project.
Yeah.
Almost more than budget.
Yeah.
But it's something that they have known was coming and worked on for years.
Yeah. No, that is not going to impact your. But yeah, I mean, if we look at that and we see that your expenses went up $100,000 and your annual budget's 125, we'll be calling your DS saying you might want to check. All right. Now's the really fun part. So, do we need to take a break? Does everybody need to move? Okay, let's take 10 minutes. Or not. I think we took about 15, but that's okay.
That's all right. We're doing fine.
We're way ahead of schedule anyway. We're going to finish early, I think, because I was expecting not to start until 10.
We'll get extra time.
Okay, so what we just did was talk about the buckets of money that you have to report on tables 2 and 3 for year-end reporting. The only reason that we went over that was to make sure that we understood what information we're trying to get out of our accounting system so that we can design an accounting system that will just provide us that information. There are 100 different ways to go about doing that, and no one way is the only right way to do it. Everybody understands things a little bit differently. Everybody's churches behave just a little bit differently, and so I'm going to give you some suggestions that you can take and then expand on them for your individual needs. The first question that you have to answer when you're getting ready to set up an accounting system is, what method of accounting do we want to use? Do we want to be on the accrual basis, or do we want to be on the cash basis? And so some of you I know are accountants, really, and so I'm probably going to bore you to death here, and I apologize. The rest of you, I don't know. Hopefully we'll find some information here. Cash basis accounting recognizes the flow of cash. So if you get money today, it's revenue today. If you spend money today, it's expense today. And that's nice and simple, and it just works. So of course the pros to doing that is that, you know, one of the things, again, like I said, it accounts for the flow of cash. So when you buy a building, it's going to show that cash going out. Maybe your capital campaign for the building for the last 6 years, you've had cash coming in and you've been recognizing it, and now we're building the building and it's going back out. And that's all we're going to do with a cash basis set of books is account for that cash. At no point are we ever going to say in our accounting records, we have a building. And we're not going to say, and we're using that building up a little bit every year, and so we need to depreciate it. We're just accounting for the cash. It's easy. But you lose some details out of it too. It's easy because you don't have to track how much people owe you. So in your accounting records, if you've received pledges and you're on a cash basis, you don't care that you've received pledges. You don't care what they owe you in terms of accounting. You're not tracking that. So you don't know what you've still got coming in. You don't know, by the same token, okay, I just had this work done that I'm going to have to pay, or the building or whatever, some major thing that we're going to pay for, and it's work that's continuing on, and at some point in the future we're going to have to pay for it. On a cash set of books, you don't care about that because all you're doing is accounting for your cash. So you can see the advantages there. It's easier, but you don't necessarily get a full picture. Another thing, when I mentioned the money coming in on the capital campaign and the money going out, those things are completely separated because you had income 6 years ago and an expenditure next year, and so you don't get a good match of money coming in and money going out for the same purpose. So that's kind of the advantages and disadvantages to cash. It's simple. And when you've got somebody sitting at their kitchen table doing the church books with a checkbook and a pen and a calculator, that's probably what you want to do. It probably is. For those churches that are fortunate enough to have a financial secretary and some software and one thing and another, well, maybe it's not the best way to do it. That is a decision that each church gets to make. There's no requirement. There's no requirement legally. There's no requirement at the conference or anything else. It's up to you. So you just have to pick which one works best. Another thing that you have to ask yourself is, who's going to be doing the books? Are they accountants? That person that's sitting at their kitchen table with the checkbook and a pencil and a calculator, and maybe that person wouldn't know what to do with a computerized system. Or maybe they would, who knows? That's a question that you have to ask and answer for yourself. The church does. Do I need something to do my books on the computer, or do I want to do them on paper, or do I really just want to do a checkbook and not worry about it at all? So you have options for all of that. Whatever decisions you make, well, okay, if you're going to go with a computerized system, there are lots and lots of computerized accounting packages out there. The favorite one is QuickBooks, because QuickBooks is inexpensive. It's a dream to work in. It's really a very easy accounting system. It's very forgiving, so forgiving perhaps that the internal controls aren't very good, because you can just delete things and change things, and it doesn't matter if it's been audited or not. I mean, you know, you just have freedom to do whatever you want to with it. But that's a good thing when you're in an environment like we are in the church, where you don't have to have a CPA audit every year. You don't have to have you don't have to do tax returns, and you're not putting anything out there that you have to disclose in any kind of official capacity. So QuickBooks is perfect in that environment because it is forgiving. If you mess something up, you can fix it. It doesn't matter how far back it was, as long as you haven't done a hard close on your books, you can just change all that stuff. And so, and that's a good thing. The bad thing is that you might have somebody making changes that really are wrong. And so there are advantages and disadvantages. In general, I'm going to say it's great to have that freedom. Peachtree is another inexpensive software package out there. These are both double entry systems, by the way. Your accountant probably would be better off understanding some double entry accounting. I have never used Peachtree. I don't know anything about it. I think it's a decent program. It's out there. It's relatively easy and inexpensive. Then you can get into another whole group of products that especially you bigger churches might really like. And those, the two examples that I've got are Power Church and Church Windows. They are integrated systems. They manage your stuff for Table 1 too. It's got all your membership stuff in there. It will produce giving statements. You know, you can do contributions over on the membership side and it'll flow into your accounting records. And so it's a nice integrated system. And surprisingly, they're very reasonably priced, especially Power Church. And again, Power Church, at least, I don't know about Church Windows, but Power Church is a double entry system as well. So we'll talk more about those here in a minute, but those are out there. And then you've got electronic checkbooks. Quicken is the one that comes to mind. It's a cheap little program. Basically what it is your checkbook on steroids. It gives you the ability to print checks instead of writing them out by hand. It allows you to do electronic reconciliations of your checkbook. It also gives you the freedom to create categories. So you could have pledge revenue category, and you could have operating expense category. So when you write your check, you attach the category, and then at the end of the year, you write or run a report, and it's going to show you those buckets just exactly the way you wanted them. That's cheapest. Quicken is not a double entry accounting system. If you're wanting a balance sheet and a income statement, this is not for you because it won't produce that. It is a checkbook that's electronic, and that's it. But it's a good little program. And then I thought I was going to tell you today, and there's Microsoft Money. And when I went to find the price, I discovered that it doesn't exist anymore, and so forget that. But there are other electronic. No, well, it does, but it's not supported anymore. So I wouldn't recommend buying it. Yeah, I wouldn't do it.
That's why we're changing.
Yeah. And then, of course, there's the paper systems, which may be a checkbook, or it might be an Excel spreadsheet, and I'm going to show you one of those too. My little bitty church does the whole spreadsheet thing because there's just not enough to justify that. The gal that does our books is a banker. She's all over it, and so Excel works. For somebody that's sitting at the kitchen table managing this and doesn't know how to do computers, Excel is going to just befuddle them. So it's just, there's no really wrong way to do it except to just not. That would not be good. So the whole beginning point for all of this is how you build your chart of accounts. Now, I'm assuming here that we're talking about a computerized system because you don't need a chart of accounts if you're going to do some of those later ones. So I'm going to start off talking as if we're working in QuickBooks. Be aware in QuickBooks, if you design your chart of accounts and you get a month into it and go, oh man, did I miss this? You can go back and rename every single account you created. You can go back to every single transaction and you can tweak them. It's a little bit harder on the deposits, but it can still be done. And so if you get into it, you brainstorm and you come up with this brainchild and it just falls flat, you can fix it in QuickBooks. Okay, now, yes?
Would it be helpful for us it would be helpful for me to know who else uses QuickBooks?
I use
So who
QuickBooks a lot.
Who uses QuickBooks?
Yeah, they do.
Okay. It's
Yeah.
just kind of interesting to see what level, what system everybody uses
Mhm.
because there are times where it would be nice to be able to reach out and say,
Mhm.
I've got this issue or this question.
Right.
And to have an
Yeah. I get calls at the conference office with QuickBooks questions. I'm happy to field those.
And if you don't use QuickBooks and use something else, Joan can help you probably at some point, or we can find somebody to help you.
Yeah, yeah.
We use us, that's what we're there for, is to help you guys. The
Mhm.
conference is to serve the local church, so please call us and we will get you what you need, no matter what you're using.
Yeah. Ann Morton works for Jeff Baker in the Office of Creative Ministries. She works for the conference as well. She's a part-time accountant. She is a whiz with QuickBooks. And then if it gets over my head, which doesn't take all that long actually, we use Accounting Plus here in Columbia. They have a QuickBooks training effort. You can take classes, QuickBooks classes with them, and they're very good. And they're also good about answering your questions if you call them and you're stuck with something. They, however, I have to give you fair warning, they are so sophisticated with QuickBooks that sometimes they get over my head. But I think, depending on who you get, I think that you can get a good answer from Accounting Plus. The partner that I work with is Denise Nelson. She probably won't field the question, but she could certainly give you to the right person.
We have had, things with QuickBooks that we've run into where we've had to change and upgrade our edition of QuickBooks because the data file got so large, or, what would happen if we wanted to convert from QuickBooks to a more integrated system? Who's gone about that and kind of the steps that they went through to go about it?
Mm-hmm.
It would be good to have some resources there.
Yeah.
Anybody that's
Yeah.
besides this lady back here that's talking.
Intuit is really only so helpful when you call them. Take your patients along when you go to talk to them. Okay.
It's pretty good, but they're just regular.
Yeah. It really depends on who you get on the phone, and it depends on how long you have to wait for them to finally take your call. Because usually after I've waited 45 minutes, my patience is gone, and it doesn't matter what they say anyway. But so the first question, if you're setting this up new, is whether or not you're going to use account numbers. I like account numbers. I do. But then I'm used to working in a set of books that's got 1,000 accounts. And so without the numbers, you'd just be completely lost. So if you've got a little bitty chart of accounts, numbers are probably not all that important. If you're going to use them, I have some ideas here. Let's talk, first of all, in your packets. Let's see, do we have any packets? I don't remember what I gave you.
You gave us that.
This
We
one?
have that, yeah.
Oh, this one.
That
Okay,
one, yeah.
so let's look at this one here for a minute.
Yeah, that's got the numbers on it.
So you can just, by glancing at it, you can see that the numbers, they're kind of grouped together, and you might guess then that they've got some significance. Typically, and this is not any hard and fast rule, but typically for asset accounts, which are going to be your cash, your bank, your cash, your petty cash, your savings accounts, your investments, your buildings, your equipment, those assets that you hold are going to, the number typically will start with a 1. So you can at a glance know that if you're looking at an account that starts with a 1, you're in an asset account. So, just have to handle it that way. Liabilities, monies that you owe, typically are going to start with a 2. So this is where your accounts payable is going to be, notes payable if you've got them, whatever you are. There again, you wouldn't have that if you weren't on accrual. So I should have said we're assuming accrual too. Typically, equity or fund balances are going to start with a 3. Revenue, your money coming in, is going to be a 4. And then when you get into the expenses, that's where typically, they can be all over the board on the expenses, but I tend to, when I'm setting it up, set payroll up to start with a 5. So all things payroll are going to have a 5. And then 6 is everything else. And you can stratify it even further than that if you want to. Okay. You have to decide how many numbers you're going to have But you can smart code those numbers. Instead of just starting out with 101, 102, 103, 104, you can make the number a little bit longer and then make each digit of the number mean something. So, for instance, 101, anything with 1 in the third spot is going to be a cash or cash equivalent. And then 102 is investments, 103. So again, you're getting a little bit more detail each time you add a number in there. It just adds a way for your chart of accounts to grow so that you don't get cash mixed in with buildings. You want to keep your chunks separate. And so if you'll come up with some kind of a smart code like that, then it'll allow you to group your assets in a way that you want to see them on your reports. Same thing with liabilities. Your accounts payable, your short-term liabilities might be 201. 202 could be all of your payroll liabilities. This is money that you've withheld from somebody's pay and you're going to send on to the IRS, or you're going to send on to pay benefits. It could be the employer portion that you're going to accumulate in a liability account and then pay your taxes out of it. And then notes payable, your longer term, you know, the number gets bigger, that third number gets bigger. So that just kind of gives you an idea how you might number things. Revenue, you know, 401. 401, I would typically use as my pledges. So like 40101 might be my pledge payments. 40105 might be identified gifts from identified givers that, you know, they didn't pledge. 40107 or 8 or whatever could be loose plate, you know, just whatever. But you're going to have them all grouped in that 401, so you know that 401XX is all you're giving, and that's all going to tie right square into that year-end reporting. If you put them there to begin with, you don't have to figure them out at the end of the year. Operating revenues, same way. Now that's going to be things like interest on your bank accounts and investment earnings and so on and so forth. So those are all going to come in through there. The revenue is so much simpler. Like I said, we did that table first because it was so much simpler. But you can literally have an account for every single one of those buckets if that's what you want. Or, you know, smart coding that third digit. You can do it that way. So what you want to do as you're trying to figure out how to set your numbers up is, how am I going to report it at the end of the year? Do I need to know this money from this money? And if so, let's create an account so that at the end of the year, I can run my balance sheet and my income statement and I can plug those numbers in and I don't have to figure anything, it's just there.